When starting a new business as a one-person operation, it's crucial to choose the right business structure. The two most common options are an LLC, which stands for Limited Liability Company, and a sole proprietorship. Both have advantages and disadvantages, and the best choice depends on the specific needs and priorities. Let's examine both options in detail. Firstly, let's look at the LLC, or Limited Liability Company. One of the primary benefits of an LLC is liability protection. Owners, who are often called members in an LLC, are generally not personally liable for the business's debts or obligations. This means that if the business incurs debt or faces a lawsuit, the owner's personal assets are typically protected. This separation of personal and business liability is a significant advantage, particularly in industries with higher risk. Secondly, LLC offer tax flexibility. Unlike some other business structures, an LLC can choose how it wants to be taxed. By default, it's treated as a pass-through entity, similar to a sole proprietorship or partnership. This means that the business's profits and losses are passed through to the owner's personal income tax return, and they are taxed at the individual income tax rates. However, an LLC can also elect to be taxed as a corporation, either as an S corporation or a C corporation. This can sometimes result in tax savings, depending on the business's specific circumstances and the owner's tax situation. Thirdly, LLC are relatively easy to manage compared to corporations. The setup process is usually straightforward, and the ongoing compliance requirements are less burdensome than those for corporations. While LLC do have some administrative requirements, such as maintaining records and holding meetings, they are generally less complex than those for corporations. However, there are some potential downsides to forming an LLC. Firstly, LLC typically have higher setup costs than sole proprietorships. There are filing fees associated with forming an LLC, and these fees can vary depending on the state. Secondly, LLC may be required to file annual reports with the state, which can add to the administrative burden. Now let's turn our attention to the sole proprietorship. One of the main advantages of a sole proprietorship is its simplicity. It's the easiest type of business to establish, requiring minimal paperwork and few legal formalities. In many cases, you can simply start doing business, and you're automatically considered a sole proprietor. Secondly, there are typically no filing fees associated with the sole proprietorship. This makes it a very cost-effective option for starting a business, especially if you're on a tight budget. Thirdly, as a sole proprietor, the owner has complete control over the business. There are no partners or shareholders to consult with, and the owner has the freedom to make all decisions independently. However, there are also significant disadvantages to operating as a sole proprietorship. Firstly, the owner is personally liable for all business debts and obligations. This means that if the business incurs debt or faces a lawsuit, the owner's personal assets are at risk. This lack of liability protection is a major concern for many business owners. Secondly, sole proprietorships are subject to self-employment taxes. This means that the owner must pay both the employer and employee portions of Social Security and Medicare taxes, which can be a significant tax burden. Thirdly, sole proprietorships may have limited access to financing and may struggle to scale up. Because the business is closely tied to the owner, it can be difficult to attract investors or secure loans. So, which structure is better for a one-person business? Several factors need to be considered. Firstly, how concerned are you about personal liability? If you're in an industry with a high risk of lawsuits, or if you have significant personal assets to protect, an LLC may be a better choice. The liability protection offered by an LLC can provide peace of mind and protect your personal wealth. Secondly, how do you prefer to be taxed? If you want to keep things simple and be taxed as a pass-through entity, both an LLC and a sole proprietorship can work. However, if you want the flexibility to elect to be taxed as a corporation, an LLC is the only option. Thirdly, how important is ease of setup and maintenance? If you want to minimize paperwork and legal formalities, a sole proprietorship is the simplest option. However, an LLC is still relatively easy to set up and maintain, especially compared to a corporation. Fourthly, What are your growth plans for the business? If you anticipate significant growth in the future, an LLC may provide more flexibility and scalability. It can be easier to attract investors or secure loans as an LLC, and the structure can accommodate multiple owners if you decide to bring on partners. In general, an LLC is often a more suitable option for a one-person business looking for liability protection, tax flexibility, and potential for growth. While the setup costs and administrative requirements are slightly higher than those for sole proprietorship, the benefits often outweigh the costs. However, if liability protection is not a primary concern and simplicity is preferred, a sole proprietorship may be a viable option. It's important to carefully weigh the pros and cons of each structure and consider your specific business needs and priorities. Ultimately, the decision of whether to choose an LLC or a sole proprietorship depends on individual circumstances. It's recommended to consult with a business advisor or attorney to determine the best structure for your specific situation. They can help you assess your liability risks, tax implications, and growth plans, and provide personalized advice based on your unique needs. The initial investment in professional guidance can pay off in the long run by helping you avoid costly mistakes and set your business up for success. Understanding the legal and financial implications of each business structure is essential for making an informed decision. Failing to do so can expose you to unnecessary risks and limit your business's potential. Remember that the right business structure can provide a solid foundation for your business, protect your personal assets, and help you achieve your long-term goals. So take the time to carefully consider your options and make the choice that's best for you and your business. Moreover, consider the administrative burden associated with each structure. While sole proprietorships are generally simpler to manage on a day-to-day basis, LLC may require more formal record-keeping and compliance procedures. Evaluate your ability to handle these administrative tasks and determine which structure aligns with your comfort level and available resources. Another factor to consider is the perception of your business. LLC may be viewed as more credible and professional than sole proprietorships, which can be advantageous when dealing with customers, suppliers, and lenders. However, this perception may not be significant in all industries or situations. Finally, remember that you can always change your business structure later on. If you start as a sole proprietorship and later decide that you need the liability protection of an LLC, you can convert your business to an LLC. Similarly, if you start as an LLC and later find that a sole proprietorship is a better fit, you can dissolve the LLC and operate as a sole proprietorship. However, it's generally easier and more cost-effective to choose the right structure from the beginning, so it's worth taking the time to carefully consider your options. Keep in mind that the laws and regulations governing business structures can vary from state to state. Be sure to research the specific requirements in your state and consult with a local attorney or business advisor to ensure that you're in compliance. By understanding the nuances of state law, you can avoid potential legal issues and ensure that your business is operating on a solid legal foundation. In addition to the factors already discussed, also consider the impact of your business structure on your ability to raise capital. LLC may have an easier time attracting investors than sole proprietorships, as the LLC structure provides more flexibility for issuing ownership shares and attracting outside investment. If you anticipate needing to raise capital in the future, an LLC may be the better choice. Another consideration is the impact of your business structure on your ability to obtain business insurance. Some insurance companies may offer better rates or more comprehensive coverage to LLC than to sole proprietorships. Talk to an insurance agent to compare rates and coverage options for each structure. Finally, remember that the choice of business structure is not a one-time decision. As your business evolves and your circumstances change, you may need to re-evaluate your business structure and make adjustments as needed. It's a good idea to periodically review your business structure with a business advisor or attorney to ensure that it still meets your needs. By staying informed and proactive, you can ensure that your business structure continues to support your success.